You have questions, we have answers. This is Jane Muller.
And this is Ken Muller. Welcome to our show, all about real estate with Ken and Jane. Well, Jane, the Fed had their meeting this past Wednesday, and as expected, they raised the rates again, a quarter point. It marks the 11th time since the pandemic
since last year, I think April.
Yeah. And to recap, before we introduce our guest, Chairman Powell, I listened to his speech. It was very a lot of repetition. How basically stating that the Fed, they're happy with the progress to date. However, the Fed's job is jobs and price stabilization. So they're strongly committed to getting the inflation down to 2%. So they still have work to do, they feel. They also feel that the effects of their rate hikes have not been fully realized yet. So they're hopeful that they were encouraged by the June report, which showed that the CPI came down a little bit lower than they anticipated. So that was some good news. But again, he cautioned everyone that was 1 month's worth of data. So we have to wait and see whether there's going to be future rate hikes at their September and future meetings. Is going to be a wait and see attitude. They have to see what the data is, because the question and answer, they tried to ask him to come in and say, well, will the Fed raise the rates further? And he just nicely answered, it's a wait and see. He doesn't know any more than we do. It's going to be dependent upon what the data comes in. The labor market, he said, is very tight. The jobs unemployment rate is very low at 3.6%. But again, they're not happy with the inflation rate. Currently, so the Fed's current lending rate is between 5.25 to 5.5%. And again, the goal is to further, get that inflation down to the 2%. Chairman Powell kept saying they're acutely aware of the distress that high inflation causes to families. So
why don't you just introduce our
so
wonderful
that's
guest
what we're leading to. So now we're going to break it down and to see what the Fed's rate what effect it has on the lending rates. And to help us with that, we're pleased to have with us our special guest today, Sanjiv Pandya. He's a VP of Business Development for Payless Mortgage Corporation. Sanjiv, welcome to our show.
Thank you for having me here. It's a pleasure to be with you, and Ken and Jane. And I'm glad that you invited me to be part of the show. Now, besides VP of Business Development, I'm also a loan processor for Payless Mortgage Corporation. And I just heard you talk about the rate hike. Fed rate hike. This was the highest in 22 years, because it was in 2001. It was this high, and now it's been 22 years, and obviously no one's used to with this kind of rate hike, and everyone's very apprehensive about the market, what's going to happen, what's not going to happen. So since it happened a couple of days ago, I guess in the coming days we'll see how market reacts to it. But psychologically, for a buyer, for a potential buyer, it's like, well, rate is too high. Maybe I don't want to buy it now. Maybe I don't want to get into the market right now. So, and the lender's going to have to come up with some, extra perks in it to offer a mortgage to the prospective buyer.
Right. I totally get it, what you're saying. On one hand, we have a seller, right?
Yes.
Seller will say, Jane, when I bought my house in the 80s, this is the rate. I said, you know what? I bought my house in 90s. I pay 13%.
Correct.
I think a few months later, my girlfriend paid 17%. But once again, that's our generation. If you talk to the people typically today's buyer, which is 30 to 40 years old, like as you said, right? 2001, since 2001, that's the highest now.
Yeah.
So the person is only less than 10 years old, right?
Correct.
So they wouldn't know the rate. They wouldn't know the payment.
Absolutely.
So for the buyer, still a little bit of shock.
Absolutely. Like I said, psychologically, it makes a difference, because 2001 almost feels like it was a past century,
Yes, that's
but
right.
22 years ago,
right.
past century. But now, with this thing, there's another thing also I want to point out, is that there are serious buyers, and they are pre-qualified, and financially they are stable, and they're looking for a good house to buy for themselves, right? But inventory is very short. Mm-hmm. I was reading a report that especially in certain counties in New Jersey, including Middlesex, and then you go in the north in Bergen, Essex, and Hudson counties, right? There's about 100,000 houses a shortage. And whatever property comes in the market, which, Jane, that it goes 20, 30, 40, 50,000 above the asking price.
Correct. Even with the interest rates being in the sixes, and I think a few weeks ago they even exceeded 7%. They were like at 7.3. I guess they vary on a daily basis. But you're exactly right. The inventory, I think we did a prior show where we showed that for Central Jersey MLS data, the inventory of homes on the market, active listings, was about 50% down compared to 2019. So that's amazing.
That makes a difference also.
It makes a huge.
Because right now you can convince the buyer to go for it, right, and refinance it after a couple of years. We know rates going to come down, right? Yes. But when they can't find a house, and if they have to pay 30, 40, 50,000 more, then they're going to take a step back.
That's right. Absolutely. But recently, the last few weeks, I see more inventory come to the market now.
Okay.
Which is a good news for the buyer.
Good.
Yeah,
okay.
Good news
that's good to know. Of course, you are in real estate, so that's good to know. That's good to know. More inventory is coming out. Yeah.
Right. But actually, for the first 7 months, the demand has been very good. Now, the hard question, which you probably can't answer, is how do you see the rates for the fall and going into the winter months for 2023?
Well, maybe too early to tell. First, let's see the reaction of this rate hike, right? Yes. And September 20th, they're going to meet again. And I get a feeling that one more time they're going to increase the rate September 20th. And after that, they will, obviously take a break. I hope so. Because then September 20th rate hike, by then we'll be predicting 2024 market condition. So, the rate is going to go high most likely in September. And I see market conditions. July is now almost over, right? So we got only 5 months left in the year. It's going to be kind of slow market, according to the mortgage industry prediction. It's going to be kind of slow. We're not going to see a real big jump in the next 5 months. Whatever happens now, it'll be in early 2024.
Yeah. Mm-hmm. You know what? I agree with you. I mean, I read a lot of things that say the same thing. Maybe one more rate hike for the remaining this year. But I think, once again, I'm only a little realtor here, but I think they shouldn't just raise again in September. Because as they said, one hand, they said the data is not in yet, right? Just like when someone gets sick, you give a person a dose of medication. It may take a while to take effect. You're not going to give the person dose after dose after dose.
True,
you could kill the poor guy, right?
Yep.
So I think they should, once again, I'm only a little realtor here. What do I know? I would think, just maybe wait till September, maybe October, November, and see what happened. Because you did so 11 times.
I kind of disagree with you, Jane, because if you listen to Chairman Powell's speech, he said that the committee will take into account the totality of the incoming data. And so far, the jobs market, according to their data, has remained vibrant and resilient.
Correct.
So I think they are monitoring that closely, the jobs as along with the inflation, because those are the two things that the Fed is responsible for. That's their prime function. So
True.
and his exact words were they're going to take into account the totality of the incoming data in determining whether or not the September 20th meeting there will be a future rate hike.
Ken, he just stopped short. Chairman Powell just stopped short saying that there will be another rate hike, but he gave all indications around it,
right.
And so we're going to monitor it, right? That means there will be a rate hike. It tells me that there will be a rate hike.
But the other question that I have is, I've read from other sources, sometimes the banks adjust for it already. So the question is, based on this past Wednesday's Fed rate hike, did your lender already have that priced in, or is that something that you have to adjust?
Banks have become over aggressive right now in order to get the businesses, because listen, lenders have certain limitations they can only go by. Banks are banks, right? So they're becoming over. They are cutting down their fees and whatever that they can cut down to bring that buyer in their house, and they are doing very well. And banks' rates are always going to be a little better than the other lenders' rates.
And what's the guideline for your bank in terms of if the Fed rate is like 5 to 5.25? What are your rates like now? I know it varies on a daily basis.
It will be anywhere between, I would say, 6 and 6.25, something like that.
Which is pretty good.
Yeah. It could be a little less than a 6, but I would say 6 and 6.25 after the last increase.
Yeah, and also subject to the borrower's credit and the down payment. So that's all.
Oh, sure, those are all variables.
Oh, that is all. That's a complete different situation. That is complete different situation.
Whether
Yes.
the type of loan product, whether it's an investment or principal home or different
whatever.
But lately, before this rate increase, before the recent rate increase, in between their last 2-3 months, lenders came out with so many interesting proposals. Low credit score, then offering certain things in, like for example, no appraisal fee, or even they will pick on the appraisal fee and they will close within 3 to 4 weeks and stuff like that. They will speed. So they came up with all these things to get the business, and it was good. Now that's why I want to see that from next week onwards. Let's see what they come up with it, because they thought they had stretched it out to maximum.
Yes. Yes.
All right. Now, how far they're going to go to get the business, that remains to be seen.
You need more creativity now.
Correct. Yes.
Isn't it? There was one lender. I'm not gonna name the name.
We can.
They gave something like, in my opinion, I think it's a fourth. Really the fourth. Approval. They make the mortgage like a cash purchase.
Yeah.
But they subject to, I said to the owner, we got one. I said, it's not cash. If it's cash, you don't subject to the appraisal.
Correct.
So it's not the cash, but they give them the cash to buy it and then later. So that's all the creative
There's
way.
also another lender that had a creative product where I think they paid the first month's mortgage or something. They're doing all different lenders are coming up with all these different.
And then the one thing I want to mention is that the credit report fees, they have gone up in the last couple of months. They have gone up from $30, $35, $40 to almost $60, $70. A major credit agencies, they are charging, right? Some of the lenders have come up with, they will have a free credit report for the buyer. So that is another big thing coming out. $60, $70, for some buyers, it's a lot of money. That, okay, I'm going to let you run my credit. What if I don't qualify? Then my $70 is gone, right? And they are very concerned about that. So now the lenders are coming out that if you qualify, we're going to reimburse you.
Yeah. Not only that. I mean, if
also
you run
the appraisal, right?
Appraisal also, yes.
Yeah, for the credit, you qualified, and then you made 10 offers, and then in 2-3 months, and then 4-5 months, and then your approval expired. You have to run again.
Yep.
So
absolutely.
that's a cost also, I mean, that's frustrating for everyone.
Very good. All good stuff. We're going to take a short break. We'll be right back after these messages. Okay, welcome back to our show. We're joined today by Sanjiv Pandya. He's the VP of Payless Mortgage Corporation. Sanjiv, why don't you give your contact info before we forget? So
sure, definitely. The Payless Mortgage Corporation, we're located in Islin, New Jersey, and we've been in the business for 28 years now. And the phone number that you can reach is 732-283-2120. So that is the phone number, 732-283-2120. We're in residential and in a commercial lending as well. And like I said, been in the business for many years, have really built a strong goodwill, especially in the Middlesex County, especially in the Edison area, as you know that. So now, like I say, there are buyers, there are serious buyers. And what other thing I have noticed before we go any further of Payless Mortgages is that builders, because builders have become aggressive, right? Yes. And the contractors, I mean to say, they go and buy this property, they pay the price, whatever they want to pay, cash money right there. Right. All right. So they pay that, they fix it up, and it goes in the market for real high value in it. And there are buyers who want to jump in and buy that, because you said earlier, Ken, that the unemployment rate is down, which is true. People have jobs, people are making good money, and the steady income and everything else. So, they have the money and everything. And when they see the house, which is about 60, 70 years old, but what I call is renovated, refurbished, add another 150, 200,000, and they're willing to go for it.
Yeah. Right. Also, there's Wall Street. There's a big money behind it. So because we had a property in East Brunswick, and then the seller got a call from these kind of Wall Street people. They buying 1,000 properties. And what happened is they have a special
Yes.
fund, right? And they hire the managers to go out to see the property, just offer cash, and then they buy it, and they just very quick and the cash.
Yeah.
They come see it, no home inspection, nothing, no question asked. They just get it done and then redone and put back on the market.
I had never seen something like this
Yeah.
before. Lately,
No.
this
Yeah,
has
a
become
lot of
known.
builders. We have a lot of builder
Yeah.
clients that are actively, like you said, we have builders we're working with that
Yeah.
put in bids on dilapidated homes and just buy it for top.
And it's easy for the seller because it's a cash buy.
Yeah.
But not even inspection needed, no
Yeah.
appraisal, nothing
Because
needed.
there's also a land shortage in Central Jersey, so they
True.
desperately want that home so they can either knock it down or refurbish
That's the
it and
point.
then sell it. And in
That's
this high market, they're really desperate. Even investors are losing out on
Yes.
on competitive homes.
Yeah.
Right? There's
Yes.
multiple.
Right.
We're still experiencing multiple bids on condos, townhouses, at least in
Single
Central
family.
Jersey,
Yeah.
single family, even as of last week. So we'll see
Yeah.
what happens in the future. But that has been the trend all through the summer.
I don't know what's going to happen in the future. I hope this really doesn't become a normal that, to buy property in New Jersey and especially in upscale neighborhood, whatever the asking price is, you got to pay more than that. I hope it doesn't become like a regular habit.
Right. So that becomes the $1 million question that a lot of people are asking, that ask us. Is this a bubble, or is this just an upward trend that maybe has a little bit of a that's going to decline slightly and adjust, or is it a bubble that's going to burst? I don't think it's a
It's
bubble,
not bubble.
but I'll let you.
Yeah,
give
no. I don't think it's a bubble. It's one of those things that just started recently, and now it's at a really high point. But slowly it's going to go down. But at the same time, when there's a rate hike and everything, and the buyers, when they take a step back on the property, say, no, I'm not going to pay that much money over the asking price, right? Then eventually, this will come down, and the market will become normal. $5,000-$10,000 more. It's okay, but 30, 40, 50,000, I have seen it.
Yeah.
It's
And
unheard.
Jane had a recent experience where she represented a seller in a particular town, and there's a luxury home, very nice home in the 900,000 range. I won't say the town, and the buyer came in. They wanted the home so badly, they gave up all their rights. The home has a septic, has a roof that probably needs to be replaced in the near future, and so that's we're still seeing that trend. A lot of buyers are still waiving these major.
That is also that is the part, the buyer's mind to understand. It's very difficult. You never know. I mean, why are they doing this? I have no idea.
I think COVID have something to do with it because I had people I know for many years, right? The couple is very conservative. They live in a townhouse, but they have a couple million. They had a lot of investment property. I helped them to purchase and rent it out. And when COVID happened, they called me. They said, "Hey, Jane, I want to buy a big house, 4,000 square feet." I said, "What? From 1,500 square feet townhouse?" They said, "Yeah." I said, "Why?" They said, the COVID made them realize life is too short. Why not enjoy what they can? And also that time, that was just the beginning. So we got them 4,000 square feet big house. Luckily, that was before the price went up. And then I just they got in touch with me a few weeks ago. They said, thank God they did what they did, because after that, it's a shutdown. And then the whole family, they will manage to get their mother to move in. Because the mother was very independent until the COVID. So they moved her in, and the son was already in the college doing the medical, like a 6 years kind of deal, and then move home now because of COVID. And then and then they have another daughter, and it's like the house is big for everybody, and they feel such a peace.
Really?
Before they were not going to pay that property tax for the over 4,000.
But when you have multi-generations
really,
and with the cultural things, that's very common in different cultures, and we have such a diversity of cultures that's
It's not only culture, Ken.
But it's also
before the COVID, they may not like this family, right? But after COVID, the mother agreed to move in.
Right, it makes economic sense.
Yeah, and they take care of each other during the COVID. And then they realize it's not so bad.
I think family sentimental values have become very high and very precious for the families to be together and to look after older parents and whatnot. So let's live together, because we all have seen the worst in the COVID. So I guess that may be the reason why they are doing it. And also what I have noticed sometimes, the buyers, they get into some kind of a race among their friends and families also, that if one bought a nice house, the other one wants to buy a nicer house.
That's exactly what happened. I think one of your clients had a friend that called her and said, my friend just
closed. My friend
Uh,
just closed house with you on Monday. That was on Wednesday. He said, they just closed with you yesterday. I said, oh, okay, but I want something same or better. I said, okay.
There you go.
Yeah, you hit the nail on the head. That was a very, very.
I've seen it. I really
work with clients of the same.
Absolutely, I've really seen it. Yeah. But now let's talk about Payless Mortgage that you asked me.
Let's talk.
As I say, 28 years in the business, and then we deal with very prominent lenders in the country, very, very, very well-known prominent lenders in the country, and we offer very competitive rates because we go out and make sure that, because because we've been in the business for long, and because we have established, I would say, grade A relationship with the lenders, right? With the top lenders in the country, we get good rates and we pass it on to the buyers if they qualify and if they have everything else in a good things, then we go out and do it, and it's working out well. We also have lenders for the commercial mortgages that we help out with the commercial mortgages also. Right now, the rates are so high in the commercial mortgages. I think everything has just become stand still in the
What are the rates roughly right now?
9 to 10.
9, that's what I thought. That's
9 to 10.
I do commercial primarily, and Jane does residential.
9 to 10.
That's what I tell my.
Anywhere you go,
9 to 10,
you're going to get that. And if you want to have a better rate, then your credit's got to be like 850, 840 or something like that, then you get maybe a quarter point or half a point less.
Maybe you make the eights, the high eights if you're lucky.
Yes. But the commercial mortgages right now, it's a very, very high. So, but residential market is very high. Refinance is also, people who really, really need money, they refinance. I'm working on a couple of refinance loans because they really need money. So it's working out okay. But the best thing to do right now is for new buyers, Jane, is that bring them in and say, listen, you qualify, you have everything, you like the house, go for it. Because rates eventually going to come down after 2 or 3 years. You can always refinance. And nowadays, they offer free refinancing costs also. Nothing, they don't have to pay anything from their pocket when they refinance, if they refinance within 5 years.
Yeah. And explain the points, because there is a way for the buyers in this day and age to still lower the rates, right?
Yes.
If they want to pay for points,
yeah.
Right? You guys still work with.
Of course, if they want to pay points, it always works out there because they can get really, really good rates now. But should you, because if rates are so high, should you want to pay points? That is a different thing. You only want to pay points if you think, let's say you are just making it with your income and everything, you're just like on the borderline, and because of that reason you're getting higher rates, then you pay points to get the low rates. But if you have excellent credit, 700 plus credit, if your income is really sufficient, if it's a 80% LTV, DTI is really within the limit, right? Then you shouldn't be really paying points. I tell the people, don't pay points. There's no need to, because rates are high.
Yeah, I agree with you, because later on you can refinance. If you pay the point down and then you already paid.
And then you have to refinance again, then that doesn't make sense.
Because the points money is gone. Definitely it's gone.
That's a few $1,000s, whatever it is, then you just lose it.
Correct, exactly. So I'm not in the favor of it. But if somebody really wants to look at it and they want to pay for it, psychologically they say, oh, well, everybody else got 6.5. I got 5 1/4 or 5 3/4. I'm happy. But they don't know that.
Psychologically, they're happy, but
correct.
Right.
Exactly.
That's right. If you talk to the neighbors at the barbecue and they brag about their rate, but you don't know the underlying variables that got them.
Buyers, they come with a very different mindset. Each and every one of them have different mindset. Each and every one of them have different concerns and stuff like that. Normal buyer would be 80% down payment, conventional mortgage, nothing else, and then go for it. Income that they qualify, DTI and LTV match as well, and they have 2, 3, 4 years worth of employment. Everything else is good. And go for it.
You're absolutely right. I represent seller, obviously. One of the buyer agent made an offer. They have like a 30% down, because we see like almost 200, 300,000 in the bank, but they want a 5%. So I called a loan officer. I said, well, the seller have concern. Why? They basically said exactly what you said. Said, well, they have different mindset. Right? They rather have the money in the bank and then they get a mortgage.
Exactly.
So they in case anything happened, they had the funding available.
True.
Everybody's
tax
different.
deductible too, which is
For
the
the
mortgage
interest,
is tax deductible. It's
Absolutely, yes.
More or less fully, unless you're in that special.
What I have noticed, Jane, maybe perhaps you have also, but obviously you're a realtor and I'm in the mortgage side. Nowadays what we do is that we spend a lot of time convincing the potential borrower to go for it, right? Before it wasn't that case. A year ago, less than a year ago, they would come in with all the documents, do my loan, blah, 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 sign it. At the end of the day, it got done. You would spend very little time because they had no time to listen to it. We had no time to explain it, right? Because the market was so good, rates were really
artificially,
low.
though, even COVID, it was an artificial suppression because that's never going to happen, hopefully, again, unless there's another pandemic. So that's just something.
Nowadays, starting with comparing rates with the different lenders, you sit down, you explain to them, this is what you're getting. If you want to pay points, this would be the situation. You're getting this benefit, you're getting that. So
and you explain the benefits, like namely the appraisal. Maybe you cover the appraisal fee. You don't charge them the credit report. There's certain fees. So every lender's
refinance, no cost.
Yeah,
and
so
stuff
those are
like
all your package you have to go through with them.
I have a thought on why. Maybe because last 3 years, people just really want to buy, already bought. And then you have all these worry worms per se behind it. Now they still worry worm because all the one ready, already bought it.
Right.
So now we're dealing with the people like sitting on the fence per se.
Yes,
right.
Absolutely.
Yeah.
All right. Well, we're almost out of time. Sanjiv, thank you so much for being our special guest. Once again, please give your contact information for our listeners.
Sure. Thank you so very much. Once again, Payless Mortgage in Islin, New Jersey. 732-283-2120 is the number. 732-283-2120 for residential, commercial mortgages. Certainly, we're there to help you out. All these years that we're in the business, and we're very, very, closely connected with the top lenders in the country, and we can definitely have your loan go. You go to Jane to buy the property, and you come to Payless Mortgage to have the loan done.
That's a marriage in heaven.
Exactly.
All right, well said. We're out of time. We'll see everyone next week. Have a great weekend.
Thank you.
Thank you so very much.